Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, November 21st. We have a busy show ahead of us. First up, we've got the inside scoop on a warning OpenAI CEO Sam Altman shared with employees in a recent memo. We've then got Redpoint Ventures coming on the show to talk about assessing early-stage bets in 2025. And we've got the CEO of Booking Holdings coming on to talk about how AI is reshaping the travel economy. We're also bringing you the second installment of The Editor's Cut, where we take you inside the Information's edit meetings to unpack the biggest questions inside the tech industry. Today, we're focusing on the fierce rivalry among the big frontier model companies. And finally, we're closing out the week with a status check on the Elon Musk OpenAI lawsuit. And given recent developments, how much or how little is at stake now for both parties? It is a big show, and so let's get right on into things. Last night, my colleagues Stephanie Palazzolo and Erin published a great piece about a cautionary note that OpenAI CEO Sam Altman sent his employees. It is a rare look into the inner workings of the company, and I want to bring on Stephanie and Erin to tell us more about it. Stephanie and Erin, welcome back to the show. It's great to have you here.
Hey, great to have you. Thanks.
So let's talk about this message, Steph. What was the note that Sam Altman sent to his employees?
Yeah, so as Erin and I reported yesterday, we were able to get a hold of an internal memo that Sam Altman sent OpenAI employees late last month. So this is, again, weeks before Gemini 3 even was released. So they were clearly already hearing rumors then that the model was going to be very good. And, in the memo, Sam is honestly pretty upfront with employees, and he does admit that the Gemini model will be very good. And he tells staff to expect temporary economic headwinds, as well as kind of just generally rough vibes for a while after the release will come out. And he does also admit that, the Gemini team has done really good work, especially on a certain part of the model training process called pre-training. But he does end on a somewhat positive note, saying that he still expects OpenAI to come out on top, and there are lots of ambitious bets that the company is taking that he thinks will pan out for it in the end.
I'm going to come back to pre-training in a couple minutes here, but Steph, this is kind of a broader story here that we've been covering at the Information, which is that OpenAI had this lead ahead of all these other frontier model companies. And it's not just Google. I mean, other companies are catching up now, right?
Yeah, no, it's been a very crazy past couple of years, but definitely as, we get further away from the ChatGPT release, we see that gap between OpenAI and other players like Anthropic and Google has definitely narrowed. And I think from what we hear from developers and founders, it does feel like, every couple of months or so, maybe one lab will come out with a model that leapfrogs the others, but essentially everyone is at around the same place.
Right.
I guess where things do differ, obviously, is in the actual usage of the products that these companies are coming out with. So even though Google and OpenAI's models do seem very neck and neck these days, we do see from usage that OpenAI's ChatGPT has 800 million weekly active users, while the Gemini app has 650 million monthly active users. So both a lower number of users, but also these users are not going to the app as often, it seems.
So, Erin, how did Google do it? Because it feels like 12 to 18 months ago, this was not the conversation we were having around Google.
Absolutely. So, I mean, this is a great question. This is the multi-billion-dollar question, a multi-hundred-billion-dollar question. Unfortunately, I think we don't totally know. When looking at what Google said, looking at what one of Gemini's tech leads, Oriol Vignals, said when this model was released, he said, the way we did this, we just made a ton of progress on pre-training and post-training. And it's okay, that's sort of the whole thing. And so Google's doing
welcome to AI. There's pre-training, post-training, there's inference. It's a whole thing.
Congratulations, we made a better model. So Google's doing a really good job on a lot of different levels of the AI training stack right now. And I'm talking to a lot of Google researchers, and a lot of people are saying, look, it's a question of we have the right people, we're going after the right ideas. We've written some about how specific people have had various impacts A couple weeks ago, my colleague Sylvia and I profiled Noam Shazir, who's a very controversial figure in a lot of ways, but people are also telling us, look, no, he came in and he did this improvement to the pre-trading stack that justified the whole $3 billion, the $2.7 billion price of the character deal that brought him in. So I think there's a lot of different pieces that come into this, but what one of my most skeptical AI sources said was like, look, this feels like it vindicates the idea that if a big enough lab that is going after the right things, like organizes its people in the right ways, like there doesn't seem like we've hit a limit yet to like what AI can do.
So, Steph, this kind of brings us back to a very core question, which actually was, it was one of the first comments on the story was, see, the models are just being commoditized. It actually doesn't really matter whether Gemini 3 is better than, GPT-5, whatever. I mean, they're coming out so fast. We're going to stop talking about these models eventually at some point. Is that the idea?
I mean, again, this is the big question. And this is a question that many investors are thinking of whenever they decide to pour billions of dollars into these labs.
Hundreds of billions.
Yes, hundreds of billions at this point. It's very crazy. I think it's fair to say that at this point, it seems like all the labs are kind of at around the same place. And so I think because, researchers are jumping from lab to lab all the time, it's very difficult to keep some sort of technique, secret at a lab for any amount of time. And so basically, I think all the researchers at the different labs like know what the other ones are doing. No really like secret sauce there. I do think though that as Erin was kind of talking about, there are, really amazing researchers at these labs, and they're still making slightly different bets on, different types of techniques that they want to focus on. And so, for instance, this is what has helped like Anthropic continue to keep its model to be, so good at coding, even while OpenAI, Google, everyone else also wants to be really good at coding as well. And so, yes, like they're all generally at about the same place, but each one can still have the opportunity to have a little edge in certain niches.
Erin, last question for you here. Let's come back to sort of some of the fundamental advantages that Google has compared to OpenAI, not the least of which is the fact that Google generates not just cash, but a whole lot of it. And OpenAI has to raise, almost the same amount of cash that Google produces in a single year in some cases. Can you talk a little bit about how your sources are thinking about just how quickly Google can pull ahead maybe a year or two from now, just based on how the business is structured?
Yeah, so I mean, like you said, Google's big advantage is that Google has so much money. Like Google does not need to raise money because Google's trailing free cash flow over the past 12 months is around 75 billion, which is more money than OpenAI has raised in its entire existence. And obviously, this has to go to a business that's supporting a lot more things than OpenAI. But the idea is Google has a sustainable business, even if AI is not directly, even if they're still able to pour a ton of money into training AI models. And so the idea is essentially Google has a lot of advantages. They have huge scale. They have all of these products with over 2 billion users already. And so I think that Google is in a really good place right now to be able to start figuring out its product strategy, to be able to start putting Gemini into all of these things. And like once it's able to do that, it's in this much more sustainable place than OpenAI is, where OpenAI needs to keep raising money. Like OpenAI has predicted that it's going to burn more than $100 billion in the next few years. And so that's all money that has to come in, and Google's just not in that place.
Right. Great. Well, Steph and Erin, it was some great reporting. I want to thank you for coming on, and we'll have you back on the show again soon.
Thanks.
Okay, well, our next guest is Managing Director at Redpoint Ventures. She was previously the CEO of GitHub, and she has made a ton of cool investments in sectors like cybersecurity, developer tools, and yes, AI. She also previously co-founded a software company of her own that she sold to VMware. Erica Brescia, welcome to TITV. It's great to have you on.
Thanks so much. Great to be here. I was COO of GitHub, by the way, not
COO. What did I say? What did I say?
I think you said CEO, but it happens to me all the time. I've never
Okay.
corrected anyone, and I'm like, I should probably make it clear because they
No. Thank you for look. I had COO on the teleprompter in front of me actually. So
You're not the first.
that's just Friday brain from my end. So thank you for correcting me on that. Look, Eric, I want to talk to you about a number of different things. I want to talk to you about your approach to venture investing, the sectors that you cover. But very quickly, look, I do want to pick up on the discussion we just had in the previous segment, which was around the lead that OpenAI had in frontier models and how that's narrowing a bit as the other model companies get better and better. And the broader question I just want to ask you is this question of commoditization in models. We are talking a lot about them now. Will we be talking a lot about this 3 years from now? And if not, how do you think the structure of all these big AI companies changes in the long run?
It's a great question, and I think the question. My view is I don't know if it's 3 years or 5 years because we're still so early in this race, but I think you're right. I don't think we're gonna be talking about the models as much. I do think they're largely gonna be commoditized, but I think they're gonna be commoditized in the way the cloud vendors have been commoditized, right? They're still incredible businesses that are printing cash, whose margins have improved over time, who have built all kinds of different services on top of the base substrate of the platform. And they all have a different feel and different ways that they spike, right? People go to Azure for different things than AWS, than
Mhm.
Oracle, et cetera. And that's been my thesis actually since about day zero of this. It's the best mental model that I've come up with for how to think about how AI and the model vendors in particular evolve over time.
Right. And so this shift to applications, this is something everyone's talking about. I mean, that seems to, OpenAI just hired Fiji Simo as the CEO of applications. Look, we have coding as one application. We have agents. Where are you looking right now in your investing with respect to what applications you think are really going to take off here?
Sure. Well, as a firm, we invest about half in infra and half in apps. I want to be clear, I think there's a ton of opportunities still at the infrastructure layer for investing. If you look at a company like Snowflake came along 6 years after AWS was
Mm,
founded. And I think it's important for us all to remember that like a lot of the key infrastructure for building applications or getting value out of these models has yet to be developed. A lot of the times it comes from people trying to build something and put it into production in a big company, having to build a bunch of tooling around it and then spinning it out. So I'm still spending a good amount of my time in cyber and infra. We also have been very active along with all of our peer firms at the application layer. And there's a couple key themes there. One of them is we're really looking at defensibility in these businesses. And the way that we think about that is what workflows are you taking over and across what systems are you integrating? I think just being an API call gets really challenging. And I know there was a whole wave of discussion around API wrappers. There's nothing wrong with building on top of these
mhm,
foundation
mhm.
models, but we think the defensibility comes when you're really integrating with different systems across a company that make it, much harder to rip something out.
Right.
I think an interesting observation on that front is, if you're one of the first companies to get in, take one of our portfolio companies, this company Liberate in the insurance space, they can deliver like a 10x improvement over existing processes because they're completely replacing human labor and automating workflows across a bunch of different systems. Now, if another AI company comes in and tries to sell to their customers, it's going to be really hard for them to deliver a 10x improvement over that. It
Right.
starts getting to be incremental improvements.
Let me ask you about the cyberspace, which is an area that you focus on a lot with your own investing.
Sure.
What is the story here in cybersecurity right now in this moment? We saw the Anthropic report about the threats that AI could pose to cybersecurity. Of course, there are people saying that, yeah, I mean, they can use it to attack. We can also use it to defend in both ways. But, we've had cybersecurity CEOs on the show that have been open about the fact that said, look, the threat is, in some ways actually outweighs the benefits as of right now. Do you see this as a concern for you?
Absolutely. It's something we've been thinking about for quite some time. There's this escalation war. Every time we create something great and great technology makes its way into open source too, there are bad people out there that will
Right.
figure out how to do nefarious things with it. And so a big part of our investment thesis in cyber has been, look, the attack landscape is getting ever more violent and active. And we need to help companies and good actors with tools that allow them to do everything that they can to beef up their own defenses. And that goes from, doing pen tests once a year to automated AI-driven pen testing. It goes to, enterprise tooling to help provide gateways and control access and provide better protections against, ever increasing threats out there. It includes investing in human risk platforms that help companies either teach employees or preventing them from falling for phishing attacks and
Right.
things like that. So we've been very active.
Let me ask you one last question before you go. I was reading up on your bio, and before you were at GitHub, you started your own company, and you actually went through Y Combinator, but more than 10 years ago now at
Yeah.
this point. And I just wanted to ask you how you think about accelerators in 2025 broadly. Who should do an accelerator? Who shouldn't do an accelerator? I'm sure we have a lot of people watching the show that are thinking about starting their own companies. Has the structure or the value prop or the sort of the methodology around thinking about that changed at all?
Yeah, it's a great question. And to all those thinking about starting a company, no time like the president, or the president's an incredible time in history to do that. I did have a very different experience with YC. My batch was 42 companies. There are several hundred now. I think what you really get is the companionship, the connections, a kind of brain trust that you can bounce ideas off of. And honestly, there's a lot of very healthy competition. Somebody is going faster than you, shipping faster, growing faster. It's a really powerful motivating factor. And I think the community that you get to be a part of and see what's working and what's not across a lot of, very highly capable, highly driven, special people.
So
is
let me ask you,
valuable.
who shouldn't do an accelerator? Maybe that's a better question.
Yeah, look, if you have spent a lot of time in very high growth, successful companies, and you feel like you already have a peer network that is very strong of people who are building companies, who you can share advice with, share learnings, commiserate with, you might not need to give up the equity to an accelerator. It was useful for me. I didn't go to Stanford. My parents weren't in tech. We started my first company outside of the US. I had a Spanish co-founder. And so I really felt like a Silicon Valley outsider. And it was really helpful for me to build my network and just
Right.
get in with a group of people I could learn from. If you don't need that, you probably don't need an accelerator.
Great. Well, Erica, thank you for coming on the show. We really appreciate it, and it's a great discussion all around. We'll have you back again soon.
Great. Thank you.
Okay. Booking Holdings is one of the biggest travel tech companies around. It is not one that we talk about a lot on this show, but it is the parent company of Booking.com, Priceline, Kayak, and OpenTable. And for context, even if you combined Airbnb and Expedia, that would still only be about 2/3 the size of Booking Holdings' market cap. And yet, many have raised questions about the threat that AI has to the travel industry's businesses. Google unveiled new AI-powered tools this week, causing many travel stocks to stumble. Of course, Booking has been embarking on its own AI strategy with a big partnership with OpenAI. Joining me now to discuss all of this is Glenn Fogel, CEO of Booking Holdings. Glenn, welcome to TITV. It's great to have you here.
Well, I'm so happy to be here.
Well, I'm excited for this conversation. Look, where I want to start is the news that happened earlier this week. Google came out with all these cool AI tools. We mentioned it up top. We saw some of the stocks take a bit of a dip. How are you thinking about those AI tools as a competitive threat to your business?
Well, let's start with just AI in general and how incredibly exciting it is for the travel industry and how pleased we are to be part of it and what we're continuing to build out in AI, which is fantastic. Now, working with our partners like Google has been really great, and we envision a great partnership going forward in the AI area. I loved yesterday when they came out with a little bit of a news piece saying, listen, we're not planning to be an OTA, which I love for them to qualify, because I think there may be some misunderstanding.
And,
of what they said
OTA,
they're
for the people who aren't as versed in the travel industry, OTA is
online travel agent.
oh, there you go. Okay.
Pretty simple. And
just-
that was a little confusion, I think, at the beginning of the week. Now, look, this isn't news at all. We've all been working. How can we use AI? I say all of us. I mean, all the people in the travel industry, and also the people, the frontier players who are creating these wonderful new technologies, whether it be Google or OpenAI or any of them. And we have been working with everybody. It's, you started off, you mentioned about our relationship with OpenAI and what we're doing with ChatGPT, which is great, the things we've done with them. But we're doing a lot of working together with Google, of course, and also others. Look, we're with Amazon and what they're doing with Alexa. Every single player in the space, us included, of course, we're all working with the different players who are doing the technology. So there's no new news here at all, though it does seem, if you look at the market in terms of stock valuation, you would think there was something new happening.
Right. Well, so I do want to get sort of inside your head a little bit. The OpenAI deal was really exciting for us here in the newsroom, because we were really curious to see which companies would partner with OpenAI and all their efforts to sort of bring everything into their platform. I'm curious, when you were thinking about whether or not to do that partnership, there were a lot of arguments for. Was there anyone in the boardroom that raised arguments against doing the deal? And what were those arguments, if there were some?
Well, first of all, it doesn't go to the board level per
Well,
se.
the board. I'm not talking about the board. I'm talking about the conference room. Fine.
Right. So, look, we always want to go where the customers are. And if customers want to begin their travel search, their travel investigation, what they may want to do in travel, we want to be there for them to help make sure they get what they need, make sure we continue to provide the service we've done over the last 25 years I've been at this company. And whether it was they wanted to start off at just the beginning with the old website with a blue link at Google, or now wanting to go to a large language model to begin their investigation, that to us is just a way that customers are starting. What we want to make sure we're there so they can get what really is necessary, which is a great experience in producing a travel thing they want that is so much better than it used to be before there was technology.
Right. Talk to me about the results that you've seen from that partnership on your business.
My God, it just started. Come back to me in a year. I'll tell you how it's going.
But I mean, it hasn't adversely affect traffic. You mentioned this on the earnings call. Traffic for your own search product has still been growing
tremendously so. And over the last, since Google started, regular search continues to grow. It's been a wonderful relationship with Google. I imagine we'll have a wonderful relationship with everybody who's come in with new ways for travelers to investigate their needs.
Right. I want to talk about a side of your business we don't talk about a lot, which is the B2B side of your business. What is, for people who aren't following the company as much, who are you selling to? What is the product, and how is that side of the business faring?
Well, the B2B business you're referring to is when we partner with somebody who has their own customers who want to have travel services. An obvious one would be a bank. So let's take an example, Citibank. We provide for Citibank customers who want to get certain sort of benefits, being a Citibank consumer, whether it be just an account there, or they have perhaps a credit card, and they are able to get their travel services fulfilled. Well, Citi needs somebody to actually do that. That would be us. That's an example. Or if you're an airline and you sell flights on your own, but you need somebody to provide the hotel benefit, we would do that for a big airline. That's the nature of that type of B2B business.
And how big is that business now?
It's big. We're not as big as the leader in the world, but it's growing, but we don't break it out.
Right. And, going back to AI, I am curious, you have more than 20,000 employees now at the company. You're using all types of software, I'm sure, to manage employees, help them sort of carry out their day-to-day activities. Have you used AI at all internally to cut costs, make things more efficient? How are you thinking about that?
Well, we talked about this on our call. In fact, many calls. You go back several quarters, and we've talked about how much AI is improving the efficiency of the company. So we do have about 25,000 employees. One of the really important things is providing great customer service. And that's an area where we see incredible benefits using Gen AI to make so many ways to improve that, what can be for many people a very frustrating experience. So just right away, nothing's more annoying in customer service if you're a customer is waiting for somebody to pick up the phone.
Right.
Well, with Gen AI, you don't have anybody waiting to pick up the phone. It's being picked up by our technology, or just want to get that simple answer to a problem or a question you have automatically without even having to deal with a call. We provide those services too. It's one of those areas where we see incredible benefits that's only going to improve. Open Table is one of our companies. So sometimes you call a restaurant for a reservation, you think you're talking to a host to get their reservation. That's not a human being. That's AI. Or if the restaurant needs some questions about the service that we provide to them at Open Table, the restaurant, when they make a phone call, is also not talking to a human being. It's to an AI agent. These things are going to just continue to improve. And whether it be coding, whether it be any type of service that we're providing, AI is going to continue to improve the efficiency.
Right. I am curious. You've been at the company for 25 years now, I think, and it's rare for anyone to stay at a company for that long. A lot of people watching this show, they have hopes to start their own businesses, and you continue to climb the corporate ladder. What is the perspective from your end on why people should aim to climb the corporate ladder in 2025 versus starting their own business?
Well, I think it's up to the individual. I am not the person to give any advice to anybody in career. I don't even give my kids advice in terms of they're out in the work world themselves. It's up to individuals and what kind of lifestyle you want to have, what kind of risks you want to take on.
But what is the argument for climbing the corporate ladder in 2025?
Climbing the corporate ladder just has such, to me, some sort of let's say negative connotation. I believe continue to develop your abilities, your knowledge, providing a better way to do your work and provide to see the results of what you put your effort into is a great thing. And whether that be done at one company or you feel that company is no longer providing you what you need to continue to advance, so you go to another company, that's fine. I myself have been very satisfied. I joined this company. At a point in my first year, our stock price was $1 a share. Now that was pre-reverse split that we had to do because we were below $1. So let's call after the reverse split $6 a share. In the summer, we got close to 6,000, right? Now it's a little bit down right now from that high, but think about that. Look at that growth. And in every single part of my journey, I've had the opportunity to do different things, have different challenges, learn different things. And it's just been so rewarding. I've never been bored. I'll tell you that.
Right. Well, Glenn, I want to thank you for coming on the show. It's a great conversation. And look, I was on the platform last night. I have some bookings for next week for my trip on the platform. So it's one that I know everyone has a relationship with.
Well, thank you very much for the business. We appreciate it. And if you have a customer service issue, try that customer service thing. You'll be remarkably.
I will. I have to tell you though, Glenn, I still ask for a person though. At the end of the day, I mean, that's with the customer service thing. At the end of it, I want a person.
Okay. Well, you can call me. How about that?
Okay. All right. Well, thank you so much, Glenn, for coming on. We really do appreciate it. It was a great conversation.
Thank you. Bye-bye.
See you soon. Okay. It's time now for our weekly edition of The Editor's Cut. Each Friday, a rotating group of senior editors from The Information will join me to take you inside our newsroom to give you a look at how we talk about the biggest tech stories, how we debate what really matters, how we figure out what the smartest questions to ask next are. The topic of the conversation today is one that we talk about all the time. In the battle of building and perfecting new AI models, which leaders have the tools to succeed and which leaders will start to lose interest? Today, we have The Information's co-executive editors, Martin Peers and Amir Efrati. Martin, Amir, welcome to The Editor's Cut, or as I should say, the co-executive editor's cut. We are very excited to have you here. Martin hates it. I can see it already. He is like, oh my God, just start asking the question, Akash. Okay, well, just for that, I'm going to go to Amir first, because Amir, you follow this space closer than anyone with the frontier models. And look, we've got 5 big players as of now. You've got OpenAI, Anthropic, Google, Meta, and xAI. And the question that I want to ask you is, as you're thinking about the progress that these models are making, and we just wrote the story, we had Steph and Erin on talking about how Google is closing the gap. How do you think about which of these models will, which of these efforts will still be as significant 3 years from now? Do you see any of these companies pulling back as the competition gets more tight? Do you see one player winning out? How do you think about that?
Well, this is a pretty important week in a couple of ways. First of all, Google's release of Gemini 3 was very well received. And our story yesterday about Sam Altman at OpenAI acknowledging that Google figured out some pretty important training techniques in the kind of early phase of training a model. It really showed that there are still differences between the major AI developers. Now, it's not saying that any one of them is racing beyond the others. They're all still in this like elite pack. But it was very, very interesting to see that there are differences between them. And I think it was an extremely kind of bullish week for AI in general in terms of capabilities, because Google clearly made some big improvements, especially on visual vectors, if you will, kind of creating charts, flow charts, anything visual seemed to be much, much improved. And that's always been a very tricky thing for large language models to handle. So overall, a very positive week, I would say, for this industry, given the kind of macro concerns and stock market concerns. As far as your question about who's going to jump ahead of the others or run away with it or whatnot, I don't think we have any indication that that's the case. Obviously, OpenAI has talked about wanting to automate the process of AI research itself, which, they seem to be pretty confident about it. We're really not sure exactly what that looks like, but they've even set some very specific timelines around that. Obviously, if you can automate AI research, you're trying to make a bet that you can run away with it. I don't think we're anywhere near that yet. I think Martin is going to talk a little bit about some of the companies and their kind of economic or financial status, and how that can kind of make it difficult for them to keep up. The one out of the 5 that you mentioned, OpenAI, Anthropic, xAI, Meta, and Google, the one that stands out right now that's just sort of nowhere is Meta, because it doesn't have a frontier model that is advanced. It doesn't have, it's really trying to catch up. So I think
they hired all these people, and now we're waiting.
We are waiting. I think the only silver lining there, or kind of hope there, is just in the same way that you saw Chinese startups and big companies like Alibaba and DeepSeek figure out a way to draft off of the progress of OpenAI, plus include some of their own innovations in the kind of model building process, allowed them to kind of bring up the rear and get close to those frontiers. I think that does probably give Meta some hope, but they're kind of the outlier right now among the 5.
So, Martin, what's your take on this from a financial lens?
I just want to point out to you, and this is how we do discuss things in the meeting, Amir didn't really answer the question. He went on a ramble about the week, which was not what you were asking about. I will actually answer the question. And the answer is, as Amir tried to steal my thunder by partly answering, Meta is obviously got a big problem. They don't have the financial resources that the other companies have. And as Amir points out, their models have sort of fallen behind. The other company I think that really has a long-term problem is xAI. They also don't have the financial resources of the other companies. And, Elon is trying to do everything himself. And I just, I don't think he's got the the money, and I think the idea of trying to reinvent the wheel on everything, that's not going to work. So my prediction, and look, it's obviously hazardous to make predictions, but I am willing to do that, unlike Amir. My prediction is that Google will come out on top. They are clearly ahead now on the actual technology. They have the range of businesses. They are what OpenAI is trying to become, but they're already there. And OpenAI, I think, will probably also they will. They'll be there in 5 years' time, but their effort to sort of be in every part of the stack probably is not going to work. And I think Anthropic will be there, but they've carved out a particular niche, which and they'll be fine. So,
Amir, I want to go ahead. Go ahead.
There's an important distinction here around resources versus business model, and I think what Martin's really getting at is it's not as if Meta doesn't have any resources, and it doesn't have a business model for AI. It can have AI as an add-on to its existing products. That's not really working. We don't really have any evidence that that's working. They don't have a new kind of business around AI, at least with some of the other big tech companies like Microsoft and others. Like they have a cloud business, they can run AI, and then with the companies we're talking about, they actually have a lot of revenue. XAI is also another big question mark there. Like I do think they would have a lot of resources if they could show that they have a product that's really catching on and that people want to pay for. They just don't quite have that yet. I think they think it's going to be pornography. We'll see, but that's what they don't have. So I think all these companies can get resources if they have a business behind it.
I want to ask,
and look, it's also worth pointing out that Meta stock price right now is flat for the year. As of July, August, it was up like 30%. The stock has really fallen. I think it's pretty clear that investors are not happy with Zuckerberg's desire to just keep spending more and more. I think that, if he cares at all about the stock price, he's going to have to eventually pull back. And, yes, he spent a fortune this year hiring all these people. He's saying he's going to really try to build capacity before he actually needs it. I think, he said at the start of the year, this will be the year that demonstrates whether or not Meta will lead the AI race. So far, this has not worked out at all. And so I'm kind of wondering how is he going to frame that by the end of the year? Is he going to admit that this year didn't work, and is he going to retool, or is he just going to keep spending?
I'm pausing because actually I don't even need to ask the questions with the two of you. It's a great conversation. I know the two of you talk to each other so much on the phone that that's sometimes you don't even need me. But look, Amir, I want to come back to you because the company that's not on this list here at all is Amazon, which is the biggest cloud player. And look, we don't even talk about them. Is there a strategy here for them? And not being at the forefront of this?
They're a cloud provider. That's what they're leaning into. I think they had some hopes and dreams around developing their own models. They really did, but it hasn't panned out. So that's sort of a nice to have for them. It's not a must have. It does mean that Google as a cloud provider has a bit of an advantage because they have their in-house model, Gemini, that more and more businesses are gravitating toward. And Amazon doesn't really have that. They really lean on Anthropic for so many things, but it's not a total disaster because they have these other businesses. So you can think of them more as like a Microsoft, if you will.
Right, Martin. Why do you think it's not gone so well for Amazon? Obviously, having a big cloud business is a big benefit to anyone trying to build an AI. Why hasn't it panned out, do you think?
I don't know. I think that the game is not over for Amazon. They're also a very big company. They've got they've got the biggest cloud operation. I think we probably shouldn't rule them out. But I also think that they don't have a business like Google has, which makes a huge amount of money. Their commerce
operation is a fairly low margin business. So they don't really have the resources that Google has, for instance, or even Microsoft. So, I'm not sure. I think we shouldn't rule them out yet, though.
Right.
They've never really recruited like the other. So when you hear about recruiting battles in AI, which is really the whole game, and you saw this summer, it was all about recruiting. Amazon's not in that conversation.
Right. Amir, last question for you. What are the big reporting questions that you are talking to other folks in the newsroom about, the answers that you really want with respect to any of these 5 frontier companies?
I think just fundamentally, we continue to focus the most on what is the trajectory of the technology in terms of the capabilities that it has. That's the thing that, our readers want to know about the most. And so when we do articles that get into the weeds of, let's say the reinforcement learning process and what OpenAI has been doing there as an example, that's what people really, really care about, because, ultimately, we want to know how quickly are things going to improve. You have all these statements from the different AI developers. It's hard to know what's real, what's not real. Sometimes they overpromise, sometimes they underpromise. So I think that's why I come back to what I said in the beginning. Like, it was a good week, I think, for the entire industry to see,
Out though,
yeah,
it was a good week for the industry from one perspective, which might be from the actual research perspective. It was a terrible week for the industry as far as stocks. I mean, we've seen, there are real questions now. Investors have clearly gotten nervous. NVIDIA's stock is down a lot in the last 3 weeks. As I said, Meta has fallen a lot. It's just, I think the market overall is very nervous. So from that perspective, it has not been a good week.
Yeah, if you're saying that the market may have bid up prices too high, that's sort of another question, and I think we can expect kind of ups and downs along the way. But if the underlying technology does continue to improve, that's just going to be good for everyone in the long term that is in this field. It may not be good for young people graduating trying to get jobs.
It won't be good for the rest of the world. No one will have a job. There won't be any power available. We'll all be paying more for power. All these people will be dependent on AI and chatbots for their therapy. It'll be awful for the world. But hey, Sam Altman will be rich.
No. The second and third order effects, I think, are very heavily debated. Don't forget, Sam Altman only gets a salary from the nonprofit of $100,000. I don't think he gets any equity from OpenAI.
He will not make any money if OpenAI becomes a $1 trillion company. Completely believe that.
Okay. Well, again, indirectly, not directly, but yeah.
All right. Well, we could keep it going, but I actually fully believe you're going to pick up the phone and talk to each other right after we hang up. So, thank you both for coming on. I'm gonna encourage you both to come on more, because it's a great co-executive or editor dynamic. We will talk to you both again very soon. Thanks.
Right. Thanks, Akash.
Okay. We've been closely covering Elon Musk's lawsuit against OpenAI, and a new story from my colleague Rocket Drew, who has been following along very closely, makes clear what the stakes now are for OpenAI and why they might not be as significant as they may have originally been. Rocket, welcome back to the show. It's great to have you here.
Thanks for having me, Akash. Happy Friday.
Happy Friday to you as well. You are the last segment of the week, and we are talking about our favorite topic, the Altman-Musk rivalry.
Nice. Ending on a fun one.
That's right. That's right. So, look, in 20 seconds, I mean, this lawsuit is not something that I refresh myself on every single day, frankly. So just give us the 20-second refresher on, the lawsuit and where it stands right now.
Sure thing. Yeah. So for those who haven't been following it so closely, who are fortunate, like Akash,
Scenes from our previous episode.
Right. Yeah. Season recap. Here's what happened. You might remember, it seems like a long time ago now, but Elon Musk was actually a co-founder of OpenAI. Right. So in the early days, he helped set it up. He donated money. He says he also donated, his time, 4 Teslas,
right,
his reputation. And he helped set up the company. He did all this on the understanding that OpenAI was going to be a charitable nonprofit with a particular mission to ensure that powerful AI benefits humanity. Now, in his view, in the years since, OpenAI has done things that are inconsistent with that agreement. So some specific ones he calls out are that OpenAI set up a for-profit subsidiary that releases products. Often those products have not been released open source, as he thought was the intention. That subsidiary has established a close relationship with Microsoft, which is, of course, a for-profit tech corporation. He argues that Sam Altman has sort of sidelined the AI safety teams inside OpenAI. And then most recently, OpenAI has completed this kind of corporate restructuring. That means that the investors have traditional equity in OpenAI now. They don't have these sort of capped profit ownership shares that they had before. So all of this together, he said, this sort of betrays the agreement we had, and he takes them to court. And he takes them to court for many claims, including antitrust claims and breach of contract. And a handful of those claims now look like they could go to a trial as early as March. So we wanted to take a look at, well, in the event that he does win some of those claims at that trial, what could come out of it?
And what could come out of? By the way, that was longer than 20 seconds, but it's fine. We'll keep going.
It's a long case.
It's a long case. But what could come of it?
Yeah. Let's start with the money side. I think that's a little simpler. At the low end, if he wins, he could get repaid for the dollars that he put into OpenAI in the early days, maybe with some interest. The number has slid around a little bit, but right now we're thinking he put in about 38 million. So maybe he gets that back and some change.
And maybe the 4 Teslas.
Right. Maybe he still wants those. He could also be awarded what they call punitive damages. So it's not just trying to make Musk whole again. It's trying to punish OpenAI for some sort of wrongdoing that they have allegedly done. The other outcome, and this is sort of the big one. This is the billion-dollar word in this case. It's non-restitutionary disgorgement. And that's a mouthful. I mean, try to say that 10 times fast.
Non-restitutory. I can't do it.
Exactly. Yeah. So it's non-restitutionary in the sense that it's not trying to make Musk whole for anything that he has lost along the way. But nonetheless, OpenAI would have to disgorge its ill-gotten profits. So the idea is anything that OpenAI has now that's traceable back to that 38 million he gave initially is something that OpenAI should not have. And so they should give it up.
I think, the most interesting part for me from your reporting was that, look, this is $1 billion. It's not exactly that much money to either party anymore, whereas the stakes were much higher before, that it could have actually disrupted the entire restructuring of OpenAI and the way the governance worked. I mean, we're talking about, dare I say, only $1 billion in money. And so the broader question I have for you, Rocket, is how much mindshare do you think this actually operates for Sam Altman and Elon Musk anymore? Is this even something that you think they care about that much?
I think it is. I think it really is. Since OpenAI has completed its restructuring, it looks a little bit less likely that the court would interfere and try to prevent or reverse that restructuring, but it's still on the table. You really can't count anything out. A number of the lawyers that I talked to about this case said, well, I advise my clients that in most cases, there's a 20% chance that anything could happen. Juries, they're unpredictable. Who knows how things will play out down the road? So I think it is very much a live issue for both of the parties. And I think if it wasn't, they wouldn't be fighting it so hard. I mean, they're putting a lot of resources into fighting this out in the courts. And if the stakes were smaller for them, maybe we wouldn't see that same level of conviction. So just to reiterate, in addition to the money side, which in the extreme scenarios could exceed $1 billion, there could also be other remedies that the court awards. It could try to sort of change the nature of the relationship between OpenAI and Microsoft, for example, because that's something that Musk has complained about. It could also try to reverse the restructuring or try to put new conditions on the restructuring.
Okay, so the stakes are still pretty high then,
I'd say.
Great. Okay. Well, Rocket, I look forward to seeing what more comes of the case and what more you dig up. I want to thank you for coming on. Have a great weekend. We'll see you soon.
Thanks, Akash.
Well, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show on Monday. Have a great weekend. Bye-bye for now.